What's up everybody, I am Jaspreet Singh and welcome to the Minority Mindset. There are a lot of factors involved when it comes to building your wealth, starting from financial education to understanding how to earn more money to creating passive income. But sometimes it's those weird little things that you don't even notice that are holding you back from taking your finances to the next level. So to keep your finances healthy, let's go over 5 weird things that are actually making your finances worse. But before we get into it, make sure you hit that thumbs up button below and subscribe to the Minority Mindset YouTube channel. This way you don't miss our new videos every single week. Weird thing number 1, having a big bank account. Wait, what? Isn't the whole point of making money so you can have a bunch of money saved up in a big bank account? See, that's what many of us have been told. But you've been lied to. The majority of people think that having a bunch of money saved in your bank account means you are wealthy. The only problem with that is when you save your money in your bank account, you're not becoming wealthier. You are slowly becoming poorer each and every day because of something called inflation. Inflation makes the value of your money go down, which makes the price of things go up. So your money has to grow by at least 3% a year to at least break even. And I'm not your bank statement, but I know your money is not growing by 3% a year in your savings account if you live in America. And beyond just becoming poorer, you also have this lost opportunity cost because you are missing out on the opportunity to invest your money and have your money grow and make you more money. I knew I should have bought the Amazon stock when it went public. Like they say, sometimes the worst investments are the investments you didn't make because of the lost opportunity. Weird thing number 2, being addicted to the sale. You know that feeling you get on the inside, that rush when you see the amazing sale on that sweet shirt for 60% off, and then you can show the system who's boss by legally robbing the store with a great deal? Wrong. Being addicted to the sale means you were not thinking of your long-term finances because you let the store trick you into spending money on something you didn't need because you thought you were saving money. Let's put it this way. Let's say you buy a shirt on sale for $100 and its original price is $150. You didn't save $50, you actually spent $100. You gotta get your mindset right. Now, don't get me wrong, there's nothing wrong with spending money and buying nice things. I mean, that's the whole point of having money, but you have to get your money right and your mindset right first. And you didn't hear this from me, but sometimes stores take that $100 shirt and then bump the price up to $150. This way they can slap on a red clearance sign. This way when you buy it for $100, you feel like you're getting a steal, even though you're just paying regular retail price. It is a store's job to get customers to buy, which is why it needs to be your job to know what you should buy and what you can afford. Weird thing number 3, thinking investing is gambling. But if the market crashes, I will lose all my money. It's gambling, I tell you, gambling. Yes, there are market cycles. There are times where the market comes up, which is called a bull market, and then there are times where the market comes down, called a bear market. These cycles have happened for decades, and they will continue to happen. On average, over the long run, the stock market grows between 7 to 10% a year, which beats the heck out of your savings account, which pays what, like 0.1% a year, and that beats the heck out of gambling your money, which gets a negative return. If gambling your money was a profitable venture, the casinos would not be in business anymore. Plus, investing your money comes with a bunch of tax breaks too. If a doctor and an investor both make $1 million after 1 year, you'd think that they're both equally rich, right? I mean, they both made $1 million. Well, you'd be wrong, because after paying taxes, this doctor would be left with about half, or around $500,000 to use, and the investor would be left with around $800,000 because these people pay different tax rates. Remember, investors get tax breaks, which is why it's not how much money you make that matters, it's how much money you get to keep. Are you guaranteed to make money when you invest? No, absolutely not. You might even lose money, but you can mitigate your risk by learning, and losing is a part of the process. And if you want to make the smartest money decisions, you have to also know what's happening in the finance and business world. This way you can use your money accordingly, which is why we created the free Minority Mindset newsletter, where we break down the top finance and business news, and then we show you how this news affects your wallet. And this newsletter is completely free, and you can subscribe to it by clicking the link up here or by clicking the link in the description below. Weird thing number 4. Not having a written budget. Why do these puppy pictures people keep billing me $15 a month? Not having a written budget to keep track of your finances and knowing where your money is going is kind of like driving without directions. Yeah, you'll end up somewhere, but it probably won't be where you were hoping to go. It's the same with having a written budget. A budget shows you where your money is going. This way you can make changes if you realize your money is going to the wrong places. And a budget tells you where you can send your money after you get paid. This way you don't have to decide if you can afford this clearance sale or not. Your budget will tell you if you can afford it. You can't afford it, don't go shopping. That wasn't me talking, that was your budget. And finally, weird thing number 5, buying things based on how much they cost instead of how much value they give you. You ever heard the saying, don't be penny wise and pound foolish? What that means is don't just buy something because it's cheap. Buy things because of how much value they give you, because sometimes cheap can be very, very expensive over the long run. I'll be honest, my family are immigrants from India, so I grew up being cheap, and I carried this mindset when I started off as a real estate investor. When I would renovate properties, I would find the cheapest labor possible, and it was great because I got to keep so much more money in my pocket. And then I realized that the work wasn't very good. So then I had to find somebody else and hire them to undo the work that I got done initially. And then I had to pay them again to do the work again properly the second time. What I thought was saving money in the beginning ended up costing me twice as much money and 10 times as much the headache over the long run. That's why you should be looking at the amount of value you get instead of just how much money you have to pay. And you can look at things like quality of work, experience, assurances, professionalism, and the amount of long-term benefits that you can get from buying this thing. In the beginning of my investing career, I was very hesitant to invest in myself. Like I remember I was analyzing buying this $3,500 course, which was very, very expensive, especially for me at the time. And I didn't know what to do because I didn't really know if I was gonna get my money back. Well, I had the money for the course, so I went ahead and bought it, and I made my money back many, many, many times over. So in hindsight, the $3,500 was almost nominal compared to the value that I got from the education. That's why I want you to focus in on the value that you get instead of just the price. And if you are interested in learning more about real estate investing, I will link a video for you to watch in the description below. And what are some other things that people are doing which are making their finances worse? Let me know what your thoughts are in the comments below. Thank you for watching. If you enjoyed the video, hit that thumbs up button and share it with one friend so we can help spread the word. Don't miss our new videos on entrepreneurship, business, and money every single week. So hit the subscribe button and the notification bell below. That way you find out when our new videos are released. And as always, keep hustling.